Hey YouTube, Jason here with DayTradingFearless. Welcome back to my channel. And if you're new, welcome. Make sure you guys hit the like and subscribe button, and let's jump right into this. So this is a trade where you could have made about $1,500 on one contract. Actually, you could have probably made about $2,000 on one contract, and I'll show you how with very small risk, with literally risking about maybe 250 bucks. Okay, so again, I'm showing you after the fact. I get that. Okay, I personally did not take this trade, but I just want you guys to be able to identify these type of trades and using nothing but two things, essentially price action and also divergence. Okay, sometimes we make trading way too difficult, so I kind of want to simplify it in this video of keep it simple, right? You don't need all the fancy indicators, you don't need 100 different things like that. So let's do a walkthrough of what we're looking at and where the trade was. And essentially, once you understand this, okay, concept, and I'll go through it on this whole video. Once you understand it, trading is really not that hard, and also the charts will tell you exactly where to put your stop loss and where to enter the trade. So let's jump into it. So right now we're looking at a 15-minute chart. Every candle's 15 minutes. Down here we're using a fast stochastic where I'm only showing the percent D is in David, 3, okay? That's all that I'm showing. I'm not showing the percent K on here. So we could see we have a nice bounce off the 200, okay? Price kind of pulls back, comes down, goes all the way up, okay? And we bounce off 200, and we're getting a little extended away from the 200. So what we see is once we get up to the 200, the stochastics are making a high. Okay, that's what should happen, right? Price makes a new high, stochastics make a new high. Then what we have is this candle breaks below its previous candle. Okay, and real quick, so I have a methodology I call the stair-step trade or the waterfall, and essentially this is all this really is. You have a move down, okay, of every candle, if you think about it, right? And just like going downstairs, right? Every candle's high is lower than its previous high. Right? So you keep going down, down, down. Well, the minute one candle breaks above its previous highs candle, like this one right here did, you have now reversed the trend. And if you think about it, if you drew a trend line, we're just on the lower, the one side of the trend line. The minute we break above, we're now on the other side of the trend line. And I also call this what's called the fish hook. Okay, where it just kind of hooks, and it's on the other side. Well, now the second we break above by one tick, now double tops are not the same. You're still in a downtrend, but once we break above by one tick, then that is going from a bearish market to a bullish market. Okay, and then normally what will happen is it'll close, and then you'll start to make higher lows, right? And higher highs. And all we care about on the way up are the lows. Higher low, higher low, higher low. And then once price breaks below the previous, we're now back in a bearish trend. This is all pure price action. Keep it simple. Nothing, you don't need to be a brain mathematician, a chartist, anything like that. You just got to really understand how this works and how price works. So if we look over here, starting with this candle, we have a low because it took out that low, but then it reversed and engulfed that candle and took out the high. So we probably opened, took out the low, then took out the high, and usually it's a continuation. So higher low, higher low, higher low, higher low. Here, this red candle breaks below the previous screen, so we're now in a downtrend. So then all we care about on downtrends, which is the stair step down or the waterfall, is higher low, a high, a lower high, a lower high, lower high, lower high, lower high, and then price finally breaks above and closes. Now a low, a higher low, higher low, higher low, and so on, okay? Now, what happened here was we kind of made a lower high, we pulled back a little bit, kind of got a little sideways, and then this candle broke above these highs by one tick. Okay, the high of this candle was 89.75. The high of these candles were 89.50. So essentially what happened was we made a new high, okay, and when we made that new high, higher low, higher low, higher low, but we come down here to our trusty stochastic and look at this. We now have divergence. As price is making a higher high, even if it be a one tick, or even if this was a double top, a true double top, this should be exactly where this is. This is showing less momentum to the upside, right? So what's happening is we know we made a new high, but then right here is where this candle broke right below its previous candle. That's it, okay? Because 1, 2, 3, boom, just like here. 1, 2, 3, 4. It finally breaks. We're now in a downtrend, okay? And if you think about this with the divergence, and you need the divergence for this to really work, you don't want where something like this, okay, where you make a high and a higher high. That's not divergence, okay? That's not what we're looking for. We're looking for the divergence with price and the stochastics. And right here, the low of this candle was 85.50. The minute we printed 85.25, you could have actually gotten short at 85.25, and your stop would have been where the highest peak is by one tick. The high of that candle would have been 89.75. So we'll say 90 would be your exit, or sorry, well, on 15-minute, I use 2 ticks, okay? It's a rule that I have. Don't do one, use 2 ticks, add that extra tick, because a lot of times it'll make a new high by 1 tick, right? And then reverse. So I want it to break by 2. If it breaks by 2, normally it'll keep going in that direction. So my stop here would have been 90.25 with a 85.25 entry, okay? With that being said, that's essentially 5 S&P points, which would be $250. And all you had to do was kind of say, hey, I think this is going to roll over. We also have what I call a M pattern, right? Double tops are M patterns. Look for the downside. We could grab our Fibonacci extension for, hey, where would our first target potentially be? Okay. High to low, back up, okay, right here it's 28.63 would have been your first target based on this, right? If you're looking for that big completion of a move, and that's about 20 points, S&P points, 21 S&P points, which would be at $500 a point, essentially $1,000. Now, you could have said, hey, I actually am looking more for the target level, okay, of the 200 period. I think we're going to come back down here, right? Or somewhere around here, look at like support, resistance levels, things like that. But if you actually would have covered around this 55 level, that would have been 15 S&P points, which would have been $1,500. And then if your ultimate target was right here around the 2850 level, okay, even maybe the 45. Again, we're looking after the fact. That's the hardest trade, is trying to figure out exactly the perfect location. But even if you looked at this 45 level from here, that's 40 S&P points, which would have been about $2,000. So that's how I come up with the 2,000. But again, that's always the hardest. You need to look at what market structure, all those other things. But just using basic price action, you got to be patient and wait for these trades to set up. But when they do set up, you can have some really, really nice winners. So again, I'm going to probably name this How You Could Made $2,000, just so you understand the lows were, if that's where your ultimate target was, based on whatever stuff you wanted to look at, prior charts, prior levels, things like that. But let's see what price did, right? After a while, it came all the way back up, right? So that would have been kind of the lows, and then it came all the way back up, but we still haven't broken out or taken out that high. So on the way, maybe you do multiple contracts and start to scale out. There's 1,000 different ways you could do this. But with that being said, this is how you trade the waterfall. 15. Keep it simple. And will you have more losses? Yeah, of course you will, because sometimes it doesn't always work. Like here, you might have tried this trade, gotten stopped out, but if you jumped in there, then you actually made your money back and then some. So, as always, I hope this video helps. Just try and pass my knowledge, my information on to you guys. And as always, I appreciate all the support and you guys watching. And until next time, we'll talk to you soon.